In this video, I'll go in details on one of the trades that I took, and some of the Discord members asked me to do a recap on it. While going over the trade, I'll cover liquidity sweep concept, market structure, intermediate term highs and lows, fair value gaps and inverse fair value gaps, order flow, and inducement entries. If you want to see a detailed trade breakdown, this is the one you're looking for. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into the trade. So first of all, before the London session starts, I was looking at the 30 minutes and the 1 hour. They're almost the same, so I would just go over the 30 minutes. I moved to the left and I saw that there was this high, which was the previous London high, and another high right here, which was swept by this level right here. So if I get my line here, we could see that there was a nice sweep right here, and then price started to go lower. Also, price getting rejected from the fair value gap, going up, creating a failure swing. It's going to be much better if there was a sweep here, but there was none. But I was still confident about this trade because of the other confluences that I'm going to go through now. Now, we can see that this fair value gap right here was first respected. Price started to go up, but then another inverse fair value gap playing out here, which is this one. So there was a fair value gap respected for the first time right here, and then second time, and then it was disrespected, creating another fair value gap, which price doesn't come to. But the first sign of reversal was the sweep. The second one was the small inverse fair value gap. But then we have price closing below the intermediate term low, this one, as well as price disrespecting the fair value gap. So 1, 2, 3, 4 confluences telling you that price is starting to go lower now. We can see in this leg right here, we only have this fair value gap and this one. So two fair value gaps. When price disrespecting this fair value gap, we can look for price to go to this fair value gap. This is how we look at it. Now, price disrespecting this fair value gap, coming back to the inverse fair value gap, and also another fair value gap created here. So we have the balanced price range. I'm going to adjust it just like this. So we have our balanced price range, and then price basically coming lower from here. Now, price was going up, started to go lower. How do we confirm that price from now is going to go lower? So now price is going to go lower. Price came here, an engulfing candle, engulfing the body of this candle, and then another candle closing below. What do we see here? There is a fair value gap on the way. Now, we know the order flow is bearish. So every bullish fair value gap or bullish order blocks should be disrespected. We have one singular fair value gap right here. This is a fair value gap right here. Now, let me put it on another color. Fair value gap right here on this leg. Singular fair value gap. Price respected for the first time right here. Respected for the second time, third time, and fourth time, and then disrespected. So now we have an inverse fair value gap at this level right here. And we have another fair value gap also right here. So that looks much better now, right? So we can confirm that this is the high and price is going to go lower from here. Now, it's still not the London session. It's midnight. Today's video is sponsored by ICT Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets, including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. This is 130. So we have 130 here, and you see prices approaching the fair value gap right here. Going back to the 1 minute, this is the time frame that I used for my entry. We can see that price went to the fair value gap, right? And then started to go lower, but it was not on the London kill zone. Now let's wait for the London kill zone. We can see that price swept the high right here, started going lower, and then started going like this. So, and remember, this is only 2 minutes after London session starting. So I was not really ready for this move, this big move, and then coming lower. I was like, okay, I might be entering. Okay, after this, I might be entering from this fair value gap. But I really look for inducement on the way if I want a high probability trade. And this is the thing that I do. I use market structure, liquidity sweep, and inducement. This is my main thing. Now, why not entering from here? If you just go to the left, you would see that you had this low this low, and this low. Price only swept this low into the fair value gap. We had a fair value gap right here. And we can see, and this is the end fill part of the fair value gap actually, and we can see that price respecting this level. So I'm not going to be entering from here unless there is a displacement below this level. And then price started going up, taking this high. I was like, okay, now I'd be looking for another move to the downside. Price starting going lower. I was like, okay, going lower. And then breaking below this point again, like this. And I was like, okay, now we have the inducement entry. Where is it? We can see that we had the sweep of the high. This is a sweep. Price started going lower. We had a fair value gap here, another one right here. Those are fair value gaps to look at. And price filled part of the fair value gap. And then we have another fair value gap above. So I was thinking about this high right here as an inducement. So I was thinking that price can actually come here, sweep this high, maybe go into the second fair value gap, and then started going lower. So I was waiting for the entry here. Price started going lower and then going up. And as soon as I see this candle, you see how this candle is showing some bearishness after taking this high. So if you're using the 1 minute strategy that I talked about, you could have literally entered here with a stop loss above the high and then target whatever you want, right? But this was not the entry that I took here, not even a limit order, because what you can do also is set a limit order slightly above the high, the inducement, stop loss above the high, and then taking profit at any level. You know, we're going to discuss the take profit level later. But what I've done here is after this candle created, I was like, okay, I'll wait for another bearish candle to show here, and then I would enter after. This is another bearish candle. So I was like, okay, I'm going to be entering here. I entered when this candle closed, just like this. And for the take profit, what do we target here? The first thing we could target is this low right here. This is the Asian low. I mean, this is the low in between Asian session and London session. But this is not enough for me. What I targeted actually is, if we go back to the 30-minute time frame, what did we see here? First fair value gap disrespected, where price should go to the second fair value gap. So actually, this is what I was targeting right here. It's the second fair value gap, something like this. And we can see that after price started going down, it did not stop. No drawdown, nothing. And we can see that a lot of fair value gaps left here. A lot of people would be left with no entries. Price started going lower. If I play more, we can see price closes below this level, and it's an aggressive one. We can see that we have a sweep here of this high. Then price started going lower, and it goes to the take profit right here. You can see there is a kind of projection from here, from the fair value gap, the 15-minute fair value gap. If I switch to the 15-minute, we can see that price actually went to this fair value gap right here. But then it continued going lower. So it could be even a bigger one, like 10-1, but I only took 5 hours from this trade. And to show you how important the take profit level is, you see how I missed some of the profits here, but you know, I already got 5 or 6 hours from this trade. And then price actually started going up from this level. So this is the importance of picking your take profit. You see price came here, started going up, coming lower, and then started going up from here. And you can see that price actually started going up from here. So this is how important picking your take profit level is. So in this trade recap, we learned how important the liquidity sweep is, and we learned how can we identify the order flow using inverse fair value gaps, using intermediate term lows and highs, as well as respecting PD arrays, and then using market structure, liquidity sweep, and inducement to enter your trades. And we also learned where to take your profit, where to expect reversal. We learned all of those stuff here.